Hello and good afternoon. Welcome to the second workshop of 2021. My name is Prisma Garcia and I'm the Director of Capacity Building for Social Venture Partners Dallas. Today we are going to have a conversation about banking and racial equity. In less than 10 years, we'll have a majority of young workforce that will be mainly people of color. And the United States expects that by 2044, we'll have a majority Black, Indigenous, and people of color population. And so it's imperative that we see the success of these people and that they fully contribute to our economy and our financial systems. So for banks, this means that we need to meet the needs and experiences of employees and consumers because this is shifting rapidly. So today, this is the conversation we're gonna have. We're gonna be talking about issues related to racial equity and banking. And I would like to thank our sponsors, Something Good Consulting Group and Bright Knatzer Law Firm, for their continuous support of social impact and corporate social responsibility. If you're on social media, you could also share any tidbits of information that you hear throughout this session using the hashtag SVPD workshop. Today I'd like to welcome our speakers. They're going to share a little bit more about themselves later on. But first off, we have Dee Brown, who's an SVP partner. She's also director in M&A strategy and transactions at EY Parthenon. We have Nate Bennett, CDP, Chief Diversity Officer and Senior Vice President, Head of Talent and Acquisition at Comerica Bank. We have Brooke Sims, Vice President of Commercial Banking Treasury Management at First United Bank. And we have Selena Peña, the Chief of Advancement Officer at Lyft Fund, and James Mcgee, who is the President of Southern Dallas Progress Community Development Center Corporation. Welcome to all of our panelists, and from here, we're gonna pass it off to them and let themselves give a brief introduction. So how about we start with our SVP partner, Dee Brown.
Hello, how's everyone doing this afternoon? My name is Dee Brown. I'm a director at EY Parthenon based out of the Dallas office. I've been with the firm approximately 3 years, and prior to EY, I worked in various leadership roles in supply chain and logistics, in automotives, chemicals, and consumer products. I also have proudly served in the United States Army Reserves, and I'm currently a lieutenant colonel with a combat tour in Afghanistan. As Prisma stated, I'm a very proud SVP partner. My community involvement also includes, I'm a board on the Girl Scouts of Northeast Texas, as well as the Texas chapter of the American India Foundation. Proud also member of the Mighty Women of Tocqueville, so want to make sure I shout them out, and also the Village Giving Circle at the Texas Women Foundation. The reason why I'm here today, just want to share very briefly, is because I wanted to be a part of the conversation on closing the economic gap. A few months ago, myself and Stephen Rabb, another SVP partner, and I were talking about access to capital and how do you close the gap for Blacks and the Latinx community. So with that, we brought in Tony and Prisma, and this is where we are today. So definitely want to thank Tony and Prisma for their amazing leadership and their support. Later in the conversation, I'll be discussing EY's Entrepreneurs Access Network, which is a program that is being supported at the highest levels of leadership within EY. And the purpose is to help Black and Latinx companies bridge the disparity gap and achieve new heights. So working with Morgan Watson, who is the Entrepreneur of the Year Southwest Region Leader, and Kevin Muscat, who's also an SVP partner at EY, and he works for EY as well, to actively recruit minority-led businesses to participate in this network that will begin next year in Dallas. So looking forward to the discussion. Thank you.
Thank you, Dee. And as you know, being an SVP partner, that is definitely number one on your list, and we're happy to have you, and also the leadership of some of your other colleagues. With that, we'll turn it over to Nate Bennett.
Thank you. Good morning and good afternoon, and thank you, Prisma, for the introduction. Definitely tough act to follow. But as Prisma mentioned, I'm Nate Bennett. I'm the Chief Diversity Officer and Head of Talent Acquisition for Comerica Bank, and been with the bank for about 11 years now. I've been in financial services going on 16, 17 years. Been in corporate America for 20 plus years. All of my work has been on the people side of the business, but really love what I do, and financial services really being an industry that I feel when we think about race and equity is a major contributor to to the success and to the transformation of really our U.S. population and beyond. Some of my personal kind of giving endeavors, I do serve as the vice chair on the board of directors for Mi Escuelita Preschool. Have really enjoyed my time and the commitment and what really the mission of Mi Escuelita. I also serve on a number of other boards. I'm also board of directors for the National Diversity Council, and serve on probably 7 or 8 other advisory councils. But the reason why I'm here is really to talk about, obviously, race and equity and financial services, where we've been on this journey for many, many years. And the equity component, as we get into my conversation later, I'm going to talk a little about equity and that transformation, and kind of where we are today, and diversity and inclusion from a workforce advancement perspective, and also touch on some things that Comerica is doing, how we're structured to impact many of the different areas around racial equity in our communities. But thank you, Prisma. Looking forward to the conversation.
Thank you, Nate. And it's great to have Comerica here with us. As we know, I learned a lot about Comerica by doing some quick research, and I learned that you're the largest U.S. commercial bank, and you're headquartered right here in our city of Dallas, Texas. So, very excited to hear what you have to say and how you've contributed to this conversation at your bank. So next, Brooke Sims, would you mind sharing a little bit more about yourselves?
Absolutely. Good afternoon. I'm Brooke Sims. I'm with First United Bank. Super excited to be here and be among such esteemed community with SVP and all of our panelists today. So I currently serve at First United as a VP in commercial banking, and I am the officer in the treasury management space for our Dallas market. I also co-lead our inclusion and diversity department. And so it's been a fun journey. I've been here for about 1.5 years. I've been in banking for about 7 years. Super just excited not only to be with First United, but thinking about the type of company and culture that we have here. As we go further in the conversation, I'll share more about that because I think it really is telling of the impact that we make in the community. From a personal standpoint, I am a very proud graduate of Paul Quinn College. I always mention that because it's our only historically Black college here. I'm very plugged in with the Alumni Association and the students. I am also a member of the Village Giving Circle, and it's been a tremendous opportunity to take part and impact our community. I do serve on the board for Midwest Food Bank, which is a tremendous place to be able to empower those that are experiencing food insecurity. And like all the panelists that have gone before me, I'm super excited to have this conversation. Once in my banking career, I was sitting with a prospect and she asked, "Why do you do this? Why are you in commercial banking?" And I said, I have such a passion for people, but I especially have a passion for women and for people of color because we can be the catalyst. We can be the driver to reduce the gaps. We could be I think of it like the worm on the hook. We can help that entrepreneur ultimately create a legacy by infusing capital into their businesses and transforming the community. So I'm super excited to be here and look forward to the discussion. Thank you, Prisma.
Thank you, Brooke. It's definitely, a good thing you mentioned Paul Quinn College. I know that, we over me, right? As Dr. Sorrell always says, and, we're proud to partner with them in our annual conference, Big Bang. So thank you for being here today. Selena, if you wouldn't mind giving an intro.
Sure. Hi, this is Selena Pena. I'm with Lyft Fund, formerly known as Acción Texas. We were founded in 1994 on the premise of leveling the financial playing field, really through capital and support. And we've been doing this work as it relates to this topic in collaboration with community and also with bankers and banks and financial institutions. As we talk about the subject today, there are challenges that we face in today's economy as it relates to opportunity capital. And we believe Lift Fund serves as an option for business owners, both startups and established, to be able to grow. We are partners in the TREC collaboration. So we actually are focused in an area that is hopefully transformative in the next 4 to 5 years. And we also participate with the Dallas Entrepreneur Center and the Revive Loan Fund, Forgivable Loan Fund, that has helped several organizations establish really an opportunity to live and breathe as small business owners through the pandemic. As we think about CRA and talk more about it, Lift Fund has partnered across the state and in North Texas as it relates to raising investments to put hands into business owners that are deserving, that are hardworking, and that deserve a hand up. And we believe that conversations like this allow us to share not only our story, but to show that you can take underestimated entrepreneurs and give them keys and tools to be successful. We have a 96% repayment rate, and that's a sign of really being able to say, how do we use tools to transform and end potential poverty, cycles of poverty as well. So it's a pleasure to be here to talk about our work as it relates to North Texas and Dallas, along with the state as well. So thank you for having me. And thank you for your service, Dee, as well.
Thank you, Selena. And you mentioned who you're working with, and I know that having immigrant parents myself, you're helping so many people achieve the American dream. So thank you for joining this panel, and I'm excited to hear what you have to say as we continue this conversation. Last but not least, I have James Mcgee. He's the president of Southern Dallas Progress, and James, I know that there's a lot out there. You've been doing a lot of research, but if you wouldn't mind sharing more about yourselves.
Like Prisma mentioned, my name is James Mcgee. I'm president and chair of Southern Dallas Progress Community Development Corporation. And I guess I'll tell you about my prior career before I started the nonprofit 3 years ago. I'm a former regulatory compliance officer. I've completed some of the American Bankers Association, National School of Compliance, the Mortgage Bankers Association, School of Mortgage Banking 1 and 2. I've also served on those committees as for those organizations, along with the Texas Mortgage Bankers Association. And so I took all that knowledge as far as how do I impact the community. So 3 years ago, we decided to start a community development corporation, with the emphasis on how do we be effective within the community. And we focus on high poverty, high minority areas, and that's areas with poverty over 40% and minorities over 40%. Right now, that's the South Oak Cliff area and the South Dallas Fair Park area. And we do that kind of through 3 things: financial literacy, small business development, and housing policy. And one of the things is for us, I know everybody's seen the wonderful Banking Below 30 series. I am the person and the brains pretty much behind that, as for providing all that transparent research. And hopefully that can forward the conversation as for how do we make an effective change, particularly, as for on equity, in Southern Dallas. And I'm happy to be part of the great panel we have here today.
Thank you, James. And we appreciate your help in doing all this research and sharing with everyday individuals through the media and other forums and your work in Southern Dallas. So I just wanted to remind the audience that the Q&A function is open. So throughout this conversation, at any point you can submit a question. We'll have time for questions from the audience later in our session. But now we're going to have panelist perspectives. So we know that we are bringing together a group of brilliant professionals, but they're all focused in different areas of this conversation of banking and racial equity. So what we want to do is open it up to each one of our panelists to give a brief presentation about their work, share more about how they interact with entrepreneurs and maybe even bank employees. And so hear from each one of them, and then we'll have a series of questions, and then we'll, obviously be pulling from the audience questions as well. And, just to remind everyone, if you're on social media, you can post about this. We love to get those posts, and obviously this is an important conversation. The National Community Reinvestment Coalition was, it's mentioned that CRA is just essential, right? We've gone through a year and now more than a year, and I think we're about to hit a year mark of working from home at SVP Dallas, and how the CRA can be a powerful tool and essential for rebuilding some of our communities, that have been hardest hit by this pandemic. And so, just with that in mind, we're going to carry out the conversation, and we'll start with our panelists. James, why don't you give your presentation now, sharing more about the work you've done banking under I-30.
So I will tell you about the interesting thing as far as once I transitioned from banking to the nonprofit world. The first thing in which I did know, there are 105 banks in Dallas County. And as far as being a former banker, trying to get in contact with the CRA officers that are at those banks, some of the information is not readily available as far as how to contact them or who to contact them. And so it kind of got me wondering as far as, like I grew up, in Southern Dallas. I know I didn't physically see a lot of branches. As far as to see how many branches are actually, here, how many branches are actually in, Southern Dallas. And right now, like I said, it's 105 branches. Even the branches that have recently opened have all been during COVID, actually, have all still been predominantly, up north. I mean, so it's about 400 plus branches above Interstate 30, and about 54 below Interstate 30, with below 30 being about 80 to 90%, minorities. I mean, so there's a significant difference as far as just the location of branches. And kind of like, in a sense, mentioning in the banking below 30, we do have some banks, about 20 or so, that are still do not include, this high minority community, in Southern Dallas. As far as CRA, I mean, CRA is a tool that's supposed to drive investments to these underserved, areas. But I always say that CRA should be an after effect of what you do as far as be day to day, and be conscious of where you're lending, where you're not lending, as far as the disparities, the demographics that that make up. Like, City of Dallas is about 60%, 65% majority minority. I mean, and so that's a lot of minorities actually live within the city of Dallas, and it kind of follows suit as far as the county. And the thing from a community standpoint, get to know who your bank, particularly what they're doing, in the community, and have those interesting conversations. And I always say, from a company standpoint, corporate standpoint, for those that bank with some of these banks, ask them what they're doing in Southern Dallas. Ask, what are you doing in low income census tracts? Because I know majority of the time people will say it's for low to moderate, but there are about 105 low income census tracts. And if not all of the majority of those, are in Southern Dallas. I mean, so from an equity standpoint, what are we doing in those census tracts? And what we're doing in those census tracts as far as to bring everything going forward. And I mean, I know I had several conversations as far as banks comparing themselves to their peer data as far as, whatever the other banks doing. I mean, I would hope those banks want to be leaders as far as, like, what are we doing in Southern Dallas? How can we do more each year? How can we do more? Not in a sense, what's the least amount of things we can do as far as, the pass the CRA exam. If you're doing what you're supposed to do and more, to support the underserved in various ways, the CRA exam should worry as far as that. And stay in contact, particularly also with the regulators. That's the OCC, FDIC, and the Federal Reserve. One of the interesting things that we looked up as far as we looked at the application data, and the application data is just, where applications being taken regardless of the branch. And 40% of the banks didn't even have an application below I-30. I mean, so those are some interesting stats. The data is readily, available out there for anybody that wants to look it up. And so that's what kind of brought on the banking below 30 story. I mean, that's been continuous the conversation as far as what can we do? And we still have some very small banks that are doing phenomenal work. We do have some collaborations amongst some of the smaller banks to see what they can join together to do. I mean, so ultimately continue the conversation, with the community. I mean, it's organizations like mine and other nonprofits that are willing to have those conversations. Let's sit down and let's figure out how can we move the Southern Dallas community forward. The last thing I would like to say is force community benefits agreements. If any bank that's truly serious about moving the ball forward, community benefits agreements are a wonderful thing to do. Traditionally, there are only 2 in Dallas, and that was due to some pending mergers. But just to do one that, hey, this is what we're going to do on paper, whether you're a commercial bank or whether you're a consumer bank, these are our goals. Let's work with the community to accomplish those. I mean, so any questions, anything like that, like feel free to contact me. I'm open for suggestions.
Thank you, James. And I want to be sure, I know that we have a broad audience, and I know myself, not being in banking and not being a banker, I was just doing some research and recognizing there's so many acronyms. The CRA, Community Reinvestment Act, it came to be in 1977. We're looking at eliminating some of the redlining, but of course, each bank has their map, as James was sharing with us. And then there are different ways, different tests. So I learned that there are loans, based on loans, investment services. So these are different tests that, banks are reporting within their assessment area, within their map, right? And so I just wanted to clarify that. And then James mentioned the regulators. So I learned myself that the regulators are, Federal Reserve Bank, Federal Deposit Insurance Corporation, which we know as FDIC, and then the Office of Comptroller of the Currency. So these are the regulators that are out there. And actually, I've learned that these tests are done, and that each bank has 300 pages of analysis, but it's only done I think over the course of maybe 5 years. So that's what I've learned. I'm sure some of our panelists have more to share. And with that, Dee, Dee, can you talk more about what EY is doing, and then financial services broadly?
Yeah, so I can definitely speak on what EY is doing. And I'll start with this. When we look at what minority owned businesses are doing today, providing about 4.7 million jobs to the economy, the U.S. economy, as well as about $700 billion in annual revenue. So when you think about the fact that we'll just say less than 1% of venture capital dollars are infused into these businesses, we could really see if these types of businesses, the Black and Latinx businesses, receive that support, that capital, that funding, and also those connections that will definitely make them more scalable and be able to go to the next level. Just think about what the impact will be. So with EY, as an expansion of our current programs, Entrepreneur of the Year, which I'm sure some of you have heard of, which has been around for 35 years, as well as the Entrepreneurial Winning Women, which has been around for 12. So to really, what we would say, complement those programs, EY has recently, we'll just say in the last 6-8 months, developed the Entrepreneurs Access Network. And it is specifically for Black and Latinx companies to bridge that disparity gap and really achieve new heights. And, and like I said, and this is not a surprise to anyone as far as the access to capital. That is one of the biggest barriers for our minority-owned businesses. So this EAN is really a business accelerator program. It includes learnings, it leverages our EY tools that we're using with our clients. So in a lot of cases, these businesses are getting the same services that we're providing to our clients. So same services, access to network, access to funding. The result, of course, is going to be growth. And when you look at the platform foundation, it's really around, again, the networking, the curating drivers to scale, and then this expansive network for funding. And with that, EY has partnered with like-minded companies and organizations dedicated to making sure that our minority-owned businesses achieve their sustained success. As far as eligibility, when we look at eligibility, the biggest thing is, of course, 51% Black, Latinx owned. This is only for-profit businesses. And when you're looking at ownership, because I want to be very clear on the ownership, you have to also factor in any investors that have infused capital into the business. So it has to truly be 51% ownership. And with that said, the final thing is really scalability. We're looking for businesses that truly have the ability to be scaled by providing these resources, okay, which again, networking, capital, and just even our ecosystem, really getting access to that EY ecosystem. So there's two types of programs that we have. We call it emerging, which is really for those businesses that are about 2+ years in. They have up to about $5 million in revenue. And again, 51% ownership as well as the scalability. And then the other group is the established enterprise, which are 5+ years in business, about 6 million or more in revenue. Again, 51% minority ownership and scalability. And I keep highlighting this, the minority ownership, because we wanted to be very clear. This is for Black and Latinx, because we understand that there is a huge gap, and we want to be very clear that is what this program is for. And the hope is, you know, as we're bringing our Black and Latinx businesses into EAN, they will eventually be the, you know, the entrepreneurs of the year. You know what EY is known for. You know, where they're on the big stage, you know, accepting their awards, and it's really a global stage. So that is really what we're looking for here. Thank you.
Thank you, Dee. And the reason why I wanted to turn it over to Dee was also to get, we know that, you know, and each of our panelists are coming from a different lens. We know that there are issues, but we don't just want to present issues, right? At SVP, we're also about solutions. And I think the Dee and EY are presenting, you know, a solution. And I know that racial equity is not, also has to happen internally. And our next panelist, Nate, you know, he can share more about diversity, equity, and inclusion in terms of talent, because I think, you know, it's hard to transition this externally if the banks themselves don't have the representation. And so, Nate, if you wouldn't mind sharing your presentation at this time.
Yeah, absolutely. And thanks for the lead in. This is a loaded topic when we think about race and equity, and especially when we think about talent, people, workforce advancement. You know, one of the things that we found to be critical to our focus around race and equity has been the structure of our organization, and what it means to the organization and what it means to our community. And first, to start, when we think about our structure, myself, as the Chief Diversity Officer, I report to our CEO. We also have our Chief Community Officer, who many of you probably are familiar with, Irv Ashford. He also is a direct report to our CEO. And we work in collaboration to focus on specific areas around race and equity. Where a lot of the work that I do is focused on workforce advancement, is focused on partnering with workforce advocacy groups, focused on building a culturally competent organization, developing and training and educating our colleagues in order for us to service and develop products and services for the minority community, for all of our communities. You know, it is a collaborative effort. And the one thing I would say is that Comerica has a huge investment on both sides when you think about the roles that both Irv and I play from a diversity side and Irv plays on the community side. And when we think through equity and also equity on both sides, it is it's been a long conversation, and I laugh a lot of times because it's now becoming a trend again. But when you think about CRA and you think about affirmative action, both of those were developed on the premise that focus on equity to drive and take action from an equitable perspective. CRA obviously focused on financial services industry, affirmative action focused on government contractors. It's important that we go back to our foundational roots that have been in play for many, many years. So when we think about driving equity internally and also in the workforce and talent, There's three major areas that we focus on: hiring, promoting, and also retaining our particular talent. And part of my role is to do just that analysis, to identify where we have adverse impact that may be happening to a specific group, whether it be Blacks or whether it be Hispanics or any other particular group specifically. And as I bring up and identify where those activities or actions or adverse impact is happening, another part of my role is to develop actions in tandem with our leadership so that we can drive better equity internally, so we can impact that particular change. And as a part of that, there are other pieces to those particular actions that range through things such as our policy development. When we think about things such as the Crown Act, our mobility process, having diverse pipelines, our hiring activity. In my introduction, I mentioned I'd oversee talent acquisition as well. This combination was purposely put together in our organization so that I can impact that front end. I can help drive and set policies. I can create fair and equitable processes that ensure that the advancement and the hiring of a diverse population is acting in good faith and overall. But in addition to that, we also have to think about, how do we, from an equity perspective, what are the quantitative things that we do to measure our progress and to drive progress? And we do that through the creation. We have a diversity scorecard that helps hold our leaders and our managers accountable to those efforts. Things such as diverse interview slates, to our succession planning process, to our mentoring process, to the creation of targeted workforce utilization goals as well. And then that also segues into, how are our people, our colleagues feeling? So we want to hear from their voice. So our qualitative measurement that we focus on is really the engagement survey and hearing from our colleagues and them telling us they feel like they're included. They feel like they're being treated unfairly. And be able to analyze the difference between genders or Black and brown and Asian and et cetera. But we use those actions to help us continue to make progress on the equity side. I mean, that's critically important, in our particular world, especially in financial services. Additionally, as I mentioned, we do have, when we think about our CRA, and Prisma talked about it a little, we're actually right in the middle of our CRA exam. So Irv and his particular team is heavily inundated with that particular process today. But it's measuring the result of our actions, so to speak. And to be quite frank, we've recognized that at Comerica we have opportunities, and we've called those opportunities out. But we have structured ourselves in a way today in which we can take advantage of it and improving on those opportunities. Selena, you're going to hear from who's with the Lift Fund, which is one of the CDFIs that we support in South Dallas, along with a number of CDFIs such as the People Fund and BCL, DreamSpring. We are heavily invested in that particular support, along with some of the things that we just actioned. We recently just named Summer Fawcett, who's going to be overseeing African-American business initiatives across all of our footprint. So she's going to play a critical role in partnering with Irv and myself in order to be effective in that way. We brought on Beatrice Kelly, who is a direct report to our head of the commercial bank, who is going to be developing, really driving business relationships in low to moderate income communities. And really working internally with our credit department to identify products and services and issues in our process. In order to provide more access to capital to the Latinx and African-American community in our markets as well. And there's a myriad of other things that we're doing in order to do that. But the last thing I will say, James is, a big part of his particular, his organization is developing the Southern Dallas community. And, we are, obviously those zip codes are really, really important to us. So, as we look at over the $530 million in in terms of overall, commercial and construction loans that we've done over the last 4 years. We recognize that there's still more opportunity. We recognize that there's still more opportunity on the investment side. But I'll try to stay brief because it's such a loaded question. And when Prisma said 7 to 10 minutes, thought, wow, that's going to be almost impossible to do. So I'm certainly open to questions as we get into the conversation. We can talk more specifically about some of the things that we're doing.
Thank you, Nate. Yes, it is a lot to talk about, even within this hour and a half. We know there are a lot of questions coming in through the Q&A function. Please submit those at any point. And I know that Nate is working with a very large bank. We have Brooke also with the bank, and Brooke, we'll turn it over to you so that you can share more about what First United is working on.
Fantastic. Thank you so much. I know in the introduction, I alluded to the fact that I would share more about First United and why that's important. So we are a smaller bank, we're a community bank, but I feel like who we are is really the story of how we empower and inspire the community. So as I mentioned, I've been here a year and a half. First United is a very unique player in the banking space. We are faith-based and we're purpose-driven. And if I took a show of hands, I included before I got here, would be surprised that that actually leads with who we are. So I say that to say that we are just encouraged and inspired by what we do. Our purpose is to empower and inspire others to spend life wisely. And we focus on 4 key pillars. Obviously, being a financial institution, financial growth and well-being is a part of that. But ultimately, what that means for us is it's a community and a culture of care. And so ingrained in who we are is really the CRA opportunity. And it's not necessarily the focus just because it's the regulation. It's because that is how the bank transforms. That's how we work. And so since I've been here, and I could attest really for this, some of the things that we've done, I've seen us really be able to empower communities. And I'll think about, and I want to talk a little bit about the pandemic. I know, Prisma, you mentioned early on how our lives have changed. We've been working from home. As a banker, we were deeply ingrained from the start of the shutdown in the PPP process. And why I thought about that was because I thought it was so powerful, the things that we did. We embraced that particular moment in time by being who we are, opening our arms and our hearts to business owners. And there are a lot of business owners of color, and providing the resources and the engagement to help guide them and really hold their hands through the PPP process. If you've seen some of the stories or read, I'm sure I'm not the only, that really were disheartening to hear about businesses that were owned by people of color that were not able to get through the process. They were not able to get the funding. And for me, what that means is they're not able to sustain the businesses that are so near and dear to their heart, that not only are they dear to their heart, they are empowering our communities. They are leaving the legacies. And so I was grateful that I could sit here at a bank and we could say, hey, come on in. It did mean that we worked tirelessly, literally day and night, and we helped thousands of people. But I was so encouraged by that opportunity that we were able to embrace non-clients. They were essentially prospects. They had never been clients of the bank, and we welcomed them in. And I think through that process, we learned a lot. Not only that people need help, but you can start to see as you comb through some of the gaps. And it turned into, like, I would say, an expanded engagement and learning, right? All of us probably have taken the opportunity to look into and dive into some of the research about the gaps within communities of color, but then when you're working very closely, and then your I would say your platform and your client base transforms almost immediately, then it really highlights some of the work that we have to do. And so the bank, myself included, and many of my colleagues have really embraced the opportunity to be deeply ingrained. Part of our culture is having people that are here that are already very plugged into the community. We have a team of people, our business development officers specifically, our Spend Life Wisely ambassadors, and these are people that are in our communities. I call them our plug, right? And they stay very engaged and give us an opportunity to really give back. They're very focused on and in touch with, I'd say, the community that allows us to continue to give our time and our dollars. And so we're kind of a new player to the Dallas market. We've been here a little over 3 years, but I think we've made a substantial impact. And even when I think about in the last week, the people that we have been able to connect with, so that as these initiatives and opportunities for capital and for wealth gap reduction are presented, our name, so the First United name, and the colleagues that I work with can be at the table and be the resources for so many people in the community. So we've been working through that. As a bank, we've also got, of course, a mortgage department, and we do focus very heavily on being able to provide down payment assistance and focusing on those that are really eager to achieve that dream of home ownership, but may not have the financial capabilities. And so we step in there. We have empowered our colleagues to be able to go through and be trained and be taught to go into the communities so that we don't have to rely on just one team to provide financial literacy and do it with excellence. We empower our employees to be able to do that and beyond our group that typically engages. We've also really tapped in to be able to provide our nonprofit, with opportunities to go through that same education. So most recently, we partnered with some nonprofits to be able to take them through the Dave Ramsey course so that they can provide financial literacy. We have created a United Partner Program. And so this is for our nonprofit partners who we can engage with them, we can understand and hear their needs, we can be able to give back to them, but not only that, we can give back to the communities that they're serving and the people that they're serving. So I say all that to say that we're deeply ingrained in it. I think it's in our heart, it's in our First United culture. I feel so grateful that we continue to expand that. On the flip side of that, I'm in the commercial banking space, but I mentioned that I also help co-lead our inclusion and diversity business unit or department. And it's giving me an opportunity, and I think our colleagues an opportunity to continue to have and embrace, I think, some of the more difficult conversations and to become very truthful and very honest with the things that we see in the environment outside of the bank. But then what do we have internally, and how can we make a huge difference and a huge impact here? So we're just continuing to grow there. I think really continuing to embrace the community and really spread this message. It's the first bank I've ever been at or worked for that talked about love. And I personally believe that love conquers all. So we go into the community, we spread that, we stay engaged, and we'll continue to expand that as we make our mark really here in Dallas.
Thank you, Brooke. I think that those are the messages we want to hear, especially during this last year. And I know everyone is submitting questions. There are some being answered on the Q&A function, and then some will come back and answer live. Selena, there was one question in the chat, if you wouldn't mind sharing a little bit more about the Fresh Loan Program in your deeper dive, I'll turn it over to you.
Sure. Thanks so much, Prisma. And to Nate's comments, we could be here for weeks potentially if we tried to break down, this notion of an equitable approach to access to capital. I want to first, just in terms of the folks on the call, there's kind of this macro element we're talking about, and then you think about yourself if you're an entrepreneur, an advocate of an entrepreneur. And it's a fine balance. I feel like many times we're straddling understanding policies and guiding people accordingly. And Brooke, your example of PPP is like spot on. So many times we see the struggle of understanding how to even tell your story as a small business owners. And with PPP, your story was through tax returns. And if you had a 1099 and your line 8 showed a negative, you could not access any PPP. This was devastating for so many people who, in this economy, this gig economy, it really was hard. I still get emotional thinking about the conversations that we had with folks, helping them navigate survival. And if you think about COVID, and if you think about disaster, there's usually immediate hand out to hand up, right? And the federal government put together both programs. Luckily, there was workforce money that they could move into if they didn't qualify for PPP. So there were solutions, but you had to know people to help you do that in many ways. And so when we think about this notion of just of CRA, first of all, it is antiquated in notion. There was actually a modernization effort that was done through OCC and through the Federal Reserve. There were so if you are a policy wonk, you know that our past administration really tried to change what this meant to investing in minorities and low income communities, both from a housing perspective and an entrepreneur small business perspective. Basically, the past administration was helping financial institutions potentially be able to draw back a little. Beautiful thing was financial institutions said, you know what, we want to keep investing. And so it was a really fine balance of watching conversations of, if we don't help invest in our communities, right, despite the federal regulation, to James's point, we're going to lose out as a community. If we can't rise across the board, what does that mean for our community? The disparity remains. And so if you're a wonk, federal regs are very antiquated, but you can get engaged by partnering with folks like James and Nate and Dee and SVP and find your chamber. I think there's some chambers here who were asking, like, how do we get involved? Yesterday, Nydia Velasquez, through her committee at the federal level, proposed PPP and extension. She had 3 chambers there. The African American Chamber and the Hispanic Chamber at the US level were participating. So how do you take that to the state level? How do you take that to the local level? I would say we are in active mode at the state level, and there are several policies that our representatives should be taking to court for us, meaning to the ledge, and saying at the state level, how do we invest in communities? And many times Texas leaves a lot on the table. So highly encourage folks, again, if you're a policy wonk, to start following. There are some legislations already posted as it relates to housing and also to small business. And then there's the local level. And we have a great mayor and a great county judge in Dallas that really are trying to figure out the landscape and support that landscape. And so when we think about CRA, it's one part of a bigger picture, as James was alluding to, as it relates to transforming economic opportunity. Now, I won't dismiss that there's still a lot of work as it relates to what James was reflecting, bank deserts, investment deserts. And Brooke's work is a testament to trying to transform that. Rooted in faith, as you said, our president and CEO is a former nun. And so she brings faith many times to the table for us. And so when we think about, where do you place yourself and who represents your business, right? This brings us connectivity to a community that deserves a hand up. And I think in terms of just, this notion of CRA, financial institutions have regulatory obligations. They actually get dinged if they take too much risk. Now, it's not an excuse to figure out how do we change things, but it's the reality. And they have opportunities to invest in organizations like James's group, also ours at Live Fund. And we take that opportunity to, what I like to say, invest in underestimated businesses. And the reason why I believe they're underestimated is because they repay at an amazing rate. You know why? Because we believe that taking a chance doesn't mean that it has to be highly expensive, that it has to be asset stripping. It actually means that we want you to succeed. And with that notion, in our values and our mission at Live Fund, we believe that when we provide capital, we're journeying with people. And so that notion of repayment is super critical. And that allows organizations like Nate's to believe in Live Fund and to believe in that underestimated entrepreneur. Could we have more of CRA investments? The answer is yes, but we actually have over $42 million of investments from different financial institutions to help us do this very hard work. And I say the very hard work because if you remember my story at PPP, it takes a journey. It takes learning and guidance and support with no judgment so that people can believe that they do have a chance to turn a corner to get to scale, as Dee was reflecting, and to just be, in it, right, and supported. And I think the people on this call allow for that to happen. Lift Fund is a CDFI, another alphabet soup, community development financial institution. And we believe that, if we equip ourselves with this passion, with structure, we can move the needle. And many times it takes conversations like this for people to be like either confused because we've said a lot, or they hold on to one thing and they're going to go and lean into it. We're here to help you do that. And we're here to help entrepreneurs really create a pathway of success, no matter their background, no matter their race, faith, or sexual preference. And CRA is just one tool of many that allows us to do this. So we are excited to be part of hopefully a new chapter, right, as it relates to getting to a better place with COVID, and hopefully seeing more opportunity for businesses to thrive in different ways. We know there are still challenges though, and we recognize that, and we've created products that reflect that with elements that give people time to pay, because we know it takes motion and sales to get to a better place. And so thank you for having us. Happy to take more questions, but as you can see, I'm super stoked about things like this, and love having people vested in talking about a really hard subject.
Thank you, Selena. And I think you mentioned policy, I know that's, you said we could be here for weeks, months. I mean, I'm sure we could. I guess, in doing additional research, I know that the Biden administration is focusing on new priorities for banking, one of them being racial justice. And these activities will likely, we'll start to hear more about them. So I know for all of you in the audience, if, that's something to look for. In the first 100 days, the Biden administration has put out more about new priorities in banking, fintech, and derivatives. So, one of them being racial justice and climate change, I believe. And so you can look more for that, and maybe I can share a report in the chat for you to read. We've received, we're getting lots of questions. I know that there's so many different directions, and there was one in particular, housing, right? Housing is definitely something that our audience has questions about. We see these housing projects and how maybe they're in violation of the Fair Housing Act. And I know that Dee was working on an SVP project with a group, a nonprofit here in town. And I just wanted Dee to discuss maybe how home ownership and like how it relates to generational wealth and that creation of wealth.
Yeah, thank you so much, Prisma. When I think about, home ownership, I mean, to me, it indirectly ties to the entrepreneur conversation as well, too. Because when you think about some of those, big business owners out there who started based on maybe their mother mortgaged their home, or their parents mortgaged their home, their grandmother mortgaged their home, in order to help fund their dream. So what it made me think about is, home ownership is not just about the dream of owning the home. It's not just about the dream of having a great, a place for your family to come to that they can call their own. It fuels other dreams as well. So with that said, thinking about really the power of home ownership, and I know, Nate, you spoke about this as well as Brooke, do your respective banks, have KPIs in place to help support what we would say is Black and Brown Latinx home ownership in our communities?
I'm sorry, was that a question?
Yes, Nate.
Yes, yeah.
Yeah.
Sorry to put you on the spot there.
Sure. I know she said Nate and Brooke. We certainly do. There are, when we think about KPIs on both sides, first and foremost, let me just say that as an organization, we believe our focus is on doing the right thing. And if we have that focus, if we are morally involved in being a solution provider, then everything else is going to fall in line with our progress, with our intentions, with our actions. But to directly answer your question, yes, we do have KPIs that we hold ourselves accountable to, really in all of those particular areas. And then, obviously, we've talked about federal regulation. We are held accountable to federally required, activities on that particular side. But outside of that, we have to police ourselves. And within our organization, we have what we call our Executive Diversity Council, which is myself, Irv Ashford, our CEO, and all of his direct reports. And we meet regularly to talk about all of these specific elements related to race and equity and inclusion in and outside the organization. As a part of that, on an annual basis, we do set targeted KPI goals for whether it's workforce representation. We look at the aggregate data in terms of, what I mean by that is within the minority groups, race and ethnicity, what are we doing? What does it look like for Blacks, Hispanics, Blacks, Hispanics, Asians, et cetera. And we do have goals that help us kind of drive towards progress. And as we think about those particular goals, we do have accountability that happens. So our overall diversity scorecard is actually tied into the compensation for our leaders in the organization. So if you progress, you meet our targets at a certain point, then that triggers a certain level of your compensation. If you don't, obviously you suffer the negative impacts to that. So although we are an organization that's built off of doing the right thing, it's critically important that we have those KPIs in place. On the community side, from Irv's group, yes, the CRA exam is a big part of that accountability, but at the same time, Irv and his particular team are held to a level of accountability, a level of, when we think about the diversity of their investments. Part of the reasons why we support and invest in multiple CDFIs is that it's important that I don't want to say share the wealth, but each particular CDI has a contingency that is probably very loyal to them. So we want to ensure that we are reaching our reaches as far as we possibly can. And ultimately, we don't have an unlimited amount of funds, but each and every particular year, we are trying to increase and improve at the rate that really is important. And in our mind, and myself and Irv's mind, we just can't invest enough. So we're constantly driving that with our senior leader, and the fact that we report to our CEO, gives us that direct line of access to have that conversation with really one of the main individuals that's driving that. But yes, KPIs are critically important, and it's something that we've been able to tie to a result, and specifically compensation, where oftentimes it's that if it's a part of your compensation, you're going to do everything that you can to improve in those areas.
Yeah, thank you, Nate. And I know that the question was also for Brooke, just to share a little bit more about maybe KPIs or product design, any strategies you use there to help in this situation, right? And I know that there's also a question in the Q&A that is asking how First United gets involved with nonprofit organizations or connected to them. So if you wouldn't mind answering that question.
I don't mind at all. Thank you. Thank you, Dee. I didn't realize at first it was a question either, but I appreciate you bringing that up. I feel like, Nate, your answer touched all the things that were running through my mind about that. So yes, KPIs. Yes, I agree. I mean, I don't know that there is enough we could do, right? There are a tremendous amount of organizations that are empowering our communities, and being able to find, to reach, to touch, and to resource those is a challenge. I'm thankful, though, that we have a team of people, specifically, I would say our business development officers and our retail leadership. I have to give them great credit, because they stay very connected to our community and they're reflective of our community. So we have people in place that look like the people that we service, from the retail aspect, from the lending aspect, and they are our plug ultimately. And so they give us an opportunity to start to structure, which we have, structure how we do banking around the communities that we service in a way that makes them feel comfortable, that makes them feel like they are growing in their financial journey. And then for the businesses, that we are embracing them and helping them leave the legacy that they intended to when they started out. So it's a yes to your question. It is a yes that we are working and will continuously work to align our bank to be reflective of, from product, service, and people, of the communities that we're serving.
Thank you, Brooke. And how can nonprofits get involved then? They just reach out to you?
Oh, yeah. Yes, they can. You call me, you can email me. I'll put my information out there. I may not be able to service every need, but I bet you there's somebody I know that can. So I'd be happy to get you connected. I mentioned we have a phenomenal program in our partnership with nonprofits in this community, and happy to make the connection.
Yes, thank you, Brooke. And I'm sure everyone on the panel would be open to sharing their information. So, we can have that as a follow-up. In terms of, I know Dee kind of set the stage there for me in terms of low income housing, and how, we have banks that maybe have received this credit, they receive tax credits based on this, and James, I know you've talked a little bit about it in your deeper dive there. We know that there were stories that WFAA had about housing, right, and these housing projects, and how they're actually not beneficial to the communities they're in. I know one of the stories I read had like one development in my neighborhood, actually, and all the crime that it's created there, and that particular bank possibly got a good mark somewhere, right? And so I guess if you could touch upon those housing projects, and what are some changes maybe in practices that you can share with us.
So I've actually had some interesting conversations in regards to, after that story aired, with some of, not any of the banks particularly mentioned in the story, but just people I know within banking, overall. Their response was, it's really a lot to play on the local and the state government. When a bank banks get credit through CRA through investments. Those investments, in a sense, it's where the tax credit kind of go into a pool. Some banks have decided not to finance, not to take that option internally as for their banking policy to invest in those projects. They do have that option, but just from a responsible standpoint, they also do have the option to do, additional due diligence as far as those projects. But I think from a community standpoint, what we need to do is, let those banks particularly know, how you feel in regards to them, financing those projects. At any particular point in time, you can do what they call a public comment letter. It actually goes on that bank's public evaluation or CRA report, and you can let them know how do you feel about them financing those type of projects, in your community. And that's going to be helpful when the regulators come in. The regulator is going to take an additional look as far as that. But it takes, like I said, it goes back to building that relationship, knowing how to complain. And then, like I said, everybody particularly plays a part, really, in regards to the LIHTC and the apartment projects, because it's not, I'm not going to say it's 100% on the banks, but they do play a part, as well as the local government and the state government, also the federal government.
May I chime in on this, Prisma, real quick?
Yes, please do.
Great. So I sit as a board chair for a housing authority, and I would say that in terms of the tax incentive, there's a couple of things, as I mentioned before. There's federal and state regulation. If you're a wonk, get involved and help change the way the structures of deals happen. especially here in Texas. If you want to get involved, Texas Association of CDCs is a great organization that advocates for affordable housing and opportunities. But within the context of the housing tax, the low-income housing tax work, a couple of things. There's a threshold that they are successfully meeting. And typically it's a blend of average median income for a family. And if you think about very similarly to CRA, it's same structure as it relates to potential buckets. And typically what ends up happening is you have lesser participation with poor people because they can't meet market rate. And then you have market rate, and then you have above market rate. And what we're seeing is that typically that lower income is a shrink, is a smaller size of opportunity that's getting access to that investment. Same time though, there's not enough federal incentives or state incentives that help equalize the market. And we all know that housing is becoming more and more expensive, right? So the deal flow is getting harder to make. So there needs to be a conversation about the very complex structures of housing tax incentives as it relates to leveling the financial playing field with accessing apartments, as James said, because that is the first step to stability. A home, an apartment is considered as someone's home, castle, house, and then moving them in, whether they're potential or not, into opportunity to, very similarly, opportunity to lease a home. And then if they are willing to purchase, and there are a lot of folks who are very hesitant to purchase because they've seen their families fall out. And so there needs to be a bigger conversation. And so the optics of what we read and see is that typically a smaller portion of families of poverty are not being able to access this. So again, if you're a wonk, get involved, talk to your council person. I know that there's been several studies about affordable housing in North Texas as it relates to how do we change this landscape as well.
Thank you, Selena. And, I think what I learned in terms of facts, I know that, in order to get these credits, right, you have to be within a certain area, right? But then IRS, and they get this through the IRS, but they have to be in a certain area. But then I read that, a lot of the banks that were having these developments, they weren't necessarily in those areas. So now they've made it past, different policies to create their housing there, but then they still got the tax incentive, right? They still got the tax credit. So they got the tax break for not putting it in a certain mapping, and then it was perpetuating the crime or the illicit activities that might have happened by having concentration of poverty. And so those are all things that we're looking to address for some of those audience members that were wondering, how does this connect? It connects because banks are getting credit for putting this, creating this. And there are solutions, and obviously we've discussed several solutions, innovative solutions from within and within banks, and we know there has to be a lot of change. I'm seeing a lot of questions come up. I know that many questions are related to entrepreneurship. And, with this, I know that we had a brief mention, Dee mentioned briefly about the program she was referring to at EY. I think if any of the panelists, in particular Dee and Selena, could share more about entrepreneurship and how that relates to this conversation and how we can help more entrepreneurs of color. Because I know that, there are several programs out there that says, enterprise or these businesses, that's really a way that we can break the cycle of poverty. So Dee, would you mind jumping in to share more about the program?
Yeah, and I'll just piggyback on some of the comments I made earlier about the program. But the biggest thing is when you see what the impact Black and Latinx companies are having to the community today. And the numbers we have are just, for the US. But, when I do think about those companies out there that are well-funded, that are not owned by minorities, and how, if they do provide what we would say is the right product or service, that is desirable to consumers, you see them, scale globally. So I, when I think about EAN, I think about not just having these companies scale in the US, I see them on a global, on a global stage. So when I think about entrepreneurship, which is, really when you think about America, America was basically built on it. That needs to be, and we'll just call it the dream. That dream needs to be for everyone who has, again, the right product service that consumers are looking for and have the ability, again, if they're providing, the right products, to be able to fulfill their dreams. And, with entrepreneurship, with, programs like what we have here at EY, again, for those companies who've kind of pushed through without the support that they've needed. Now we have this program in place to get them that funding, to scale them to the next level, and really taking ownership, like some of our partners that we're working with, understanding the gap is there, and it's going to take, bold statements, bold programs like EAN to close the gap. So, that's really what I want to say about entrepreneurship.
And Nate, I see you
In
jumping
terms
in.
Oh, okay.
Yeah, I'm just going to make one quick comment. Just to obviously, I'm glad this conversation started. Education obviously is critical, and we've been talking a lot about banks and investing, but we also, as an organization, we believe in investing in our resources to provide education. One of our partners, the Dallas Entrepreneur Center in South Dallas, heavily invest in. We also provide many of our bankers as resources for that education process. I would certainly, if you're an entrepreneur and you're thinking through kind of what to do next, the DEC is definitely a great nonprofit organization that can help you. And there's other financial institutions that invest in that particular service as well. On top of that, we also have what we call business resource groups, where they're to provide the reach into our multicultural market communities and provide access to capital. And a lot of that access to capital is done through the education that we can provide. I did share my email address, so if anyone is interested, we can certainly match you up with with the right business resource group, also the DEC, that also provides some education around this area.
Thank you, Nate, for those resources. And of course, SVP is also doing pro bono consulting. We have a history of working with nonprofits, and now we're also working with social entrepreneurs, creating for-profit, for-good companies. And so, we're also a resource in this community. Selena, I wanted to turn it back to you because I know that you had a couple comments to share. And then I know that there are many programs out there, and maybe there's a women's business center at
that's
so
right.
I wanted to talk about that.
Yeah, I mean, we actually have a great partnership with the DEC in terms of our recovery loan, which Nate, your team, helped support. So thanks for that, as it relates to just recognizing other solutions aside from federal funds to get businesses back on their feet. In terms of, thinking through the work as it relates to Lift Fund, we have multiple partnerships that connect the dots. I know we're probably all too young to remember, but there was this thing, a black book that your parent or your grandparents had that had, the 5 or 20 people they would always call, right? And we feel that at times, sometimes it's not necessarily a program, but it's connecting the dots for folks to resources that make a difference. And I think Dee and Nate, what you're reflecting on is, someone in the chat put, people don't understand KPIs. That's okay. The goal here is to get them to understand KPIs, and to bring it down to a level that they can not be afraid of it, but own it, and adapt it in their own way. And at Lift Fund, we provide responsive solutions as it relates to business support, business education, technical assistance, whatever you want to call it. But the thing is, we don't do it alone. And so when you think about, I know I saw on your site, Prisma, register for getting mentors, right? Or register for, like, get connected with someone and tell them your pain points. Don't waste time. We know people's time is very limited. And so at Lift Fund, we really try to understand what are your pain points so that we can connect you to the right resource. As you all know, we've heard about the digital divide. That is very real, especially in entrepreneur of color businesses, because the COVID pandemic hit them like no tomorrow. I'll give you an example. One of our clients who has a PPP loan, she actually was like one of the best tacos, and there were 12 businesses that had 12, all of their sites. She did not have a website. So if you think about, like, how do we connect to help build scale, Dee, to your point, it's like finding the right organization that fits your style, but know that organization is going to pass that baton as you get to a certain level. So we have the Women's Business Center. We actually have overall several different programs that we run. And we also have where we're trying to figure out how do we provide professional services from a seed perspective, so that someone is, not only learning about their financials, but learning how to sell online, right? And so when you think about all of the folks that are on this call, we can connect you. Or if you're an ambassador for entrepreneurs, we are happy to help you as well. In 10 years, Lift Fund has provided $43 million to micro and small businesses in North Texas. And we actually do more consultation services than we do loans, because sometimes people are not capital ready, and that is a reality. But if people are patient, willing to learn, and think through strategies to help them, we're here for that. And I know many of the folks on this call are as well.
Great. Thank you, Selena. Brooke, I think you had a couple comments to add.
Yeah, so Selena, thank you for sharing that. You just triggered some of the things that I have experienced. I think my colleagues, one of the things when I think about entrepreneurs, especially entrepreneurs of color, one of the pitfalls is not understanding the importance of, or sometimes it's understanding or not having the opportunity to have a banking partner. We are consultants, we are advisors, we're here to help you grow. You need an advocate because at some point you may need a capital infusion. You need somebody that looks like you, that understands your business, that understands what you're going through at the table on your behalf. So I say that because we engage with so many women and so many people of color, and we have such a wonderful opportunity to advise and to guide, but there are sometimes some gaps. And there's small things that I think as a banker, it's easy to take for granted, because you think somebody starting a business, they understand everything about finance, they know what they're doing, and we hope that they do, but they don't always. So I just want to make the plug to say, if you don't have a banker, and I don't mean a bank, because there's lots of banks and we can hold your money and we can move it around for you, but I mean a banker that you can call whenever you have a question, whenever you need a resource, you have to find one. I welcome you to First United, but whether or not we fit you, we'd love if we can. It wasn't really my plug for First United. It was my plug to say, find the right person for you. Find the person that's going to be at the table for you and that's going to grow with your business, because it's imperative. As a business owner of color, you have to have that person on your advisory team.
Thank you, Brooke. I know that I'm looking at the time, and I know that there are still so many questions. I know that one of the, we keep hearing bank, and there are definitely some people that are not a part of a bank. We have organizations that are working with the unbanked or underbanked. We hear this a lot. I don't know if each of the panelists, or maybe we can start with Nate and then Brooke and whoever else wants to chime in. And I think it's important to talk about this. I know we don't have much time, but just what are the, what's the bank's approach or your organization's approach related to these populations where, we know that, there are predatory lenders. I mean, once we know that there's a lot of policy surrounding that. I mean, one time, in my neighborhood, I was like, well, I want to shut these places down. But then one community member said to me, well, Prisma, how am I going to get the money? And like, are you going to be the one to lend it to me? And I'm like, well, I guess I know why people are going there. So I just, didn't want to leave that subject untouched. So if Nate, you could share a little bit more about maybe what Comerica is doing to outreach. I know you mentioned earlier some financial education, and, and Brooke or any of the panelists, if you want to chime in about that conversation, that particular topic.
Yeah, I'll just touch on it briefly. So that's a complex, sounds like an easy question, but it's rather complex. But when we think about our approach as an organization in that particular space, it's one, we have to look at our own internal policies and practices, particularly when we think about our credit organization. Also, when we think about opportunity for growth, also when we think about opportunity for our moral compass and providing action and solutions, and recognizing that there are communities that that are underserved in many ways, and also have been taken advantage of in many ways as well. So we have to look at it we have to make a collective approach at how we mitigate that. And one is, as I mentioned earlier, an individual by the name of Beatrice Kelly is working closely with all of our revenue lines of businesses and looking at all of our products and services, our credit processes internally, how we our educational processes overall, and how we do business in these particular communities. What are the missed opportunities? What are the limitations that we have as an organization? What are some of the myths that have circulated around over the years internally at the organization that we need to educate on and remove in the organization? So it's a constant kind of evaluation and reevaluation process of how can we be better? How can we do better? And we're on that particular path. I can't say that we have a fail-safe solution today, but we're doing that through both an internal educational process as well as listening to our communities. We do have a community advisory group that we have that's been around for years, and our organization meets with this community advisory group to tell us really how we're doing, what are the opportunities. What are we hearing from individual business owners, major business owners in those particular communities? And we take that, we try to ensure that we're taking action in that realm. But listening and hearing from our community advisors is a big thing, a big part of kind of our mitigation efforts in that space.
Great. Selena, do you have something to add?
Yeah, just in the terms of your advocacy role, right? Oops, let's see here. I think it's really important to understand that at the state level, predatory lending can range anywhere from 50% to like 400%. And while that person wants access to capital, it should not cost them that much. So we all firmly believe in that. And when Diego Bernal out of Bexar County issued, this whole legislation, no one would touch it despite no predatory lenders showing up. So there is something systematically that we need to address as it relates to being change agents, to Nate's point about what is our North Star and our values as it relates to easy access without asset stripping. There's a book called Scarcity, and this book gives you the notion and kind of dismisses, Prisma, some of the comments of being underbanked. Poor people actually know where every dollar and cent is going. You know why? Because they have to survive. And so how do we help them celebrate that versus challenge them every time they try to knock on opportunity? And that really is, again, a policy issue, so that we change the paradigm and help people navigate whatever product fits them without so much weight of cost. And so we have to keep that front and center as we think about not only CRA, but just access to capital in general.
Thank you, Selena. I know, James, your work is with the community. You've talked about how you've transitioned from your roles at banks and are now working in the community. So if you could add to that.
So I was so as far as the unbanked and underbanked, I mean, as far as the numbers, here in the DFW area of Dallas County, the numbers are going up every year. That report is readily available on the FDIC. I mean, so you get the absence of banks in our community or opening new branches in our community. But then there's the product side. How many banks are actually offering second chance financing? And if you're not offering that, have you taken a look at it? I kind of posted the Bank Owned Coalition in the chat. They were kind of once in Dallas and kind of transitioned to another program, Financial Inclusion Roundtable. But we're actually looking into bringing that back. And that's to, again, we have a lot of people that just need a second chance checking account. What banks are going to change their policies to adapt to the needs of the underserved community? And then another thing that was actually mentioned as far as on the lending side, so there are programs, special credit programs that are available through the some of the regulations through the CFPB, Consumer Financial Protection Bureau, that are available that banks can create to find a solution to the lending disparity. I mean, it goes back to, are you a bank? Do you want to find a solution? Do you want to think outside the box? In the course of the either, yes or no. And so, I welcome those banks to have those conversations. Let's take a look at it and let's work to make an effective change.
Thank you, James, for that call to action. And I know that we only have a few minutes left, and so I want to just go around and see if you had any final words. Obviously, we're almost out of time, so if you could keep it brief. Dee, we'll start with you.
Yes, I'll keep it very short. I put the link for the entrepreneurship, the Entrepreneur Access Network in the chat. So please feel free, go on the website, look at the information. It's very easy to apply to the network, and you get a response. So that's the only thing I wanted to leave with.
Thank you, Dee. Nate, why don't you go next? Any final words?
Yeah, I'll just be brief. Feel free to, like I said, we love feedback. And the more that we hear from the community, business owners, business leaders in our community, it makes us a better bank. So feel free to email me if you have questions, and we'd love to hear from you. Thank you. I would also say that, one of the things that I really love is the collective unity around advancing race and equity. I've learned so many different things, Dee and Brooke and Selena and James. Thank you for what you've shared today. I certainly want to continue to remain engaged. So thank you.
Well, Nate, that, I would be remiss if I didn't mention that you can always stay engaged as an SVP partner. But with that, I'll turn it over to Brooke.
Sure.
Good plug. Yeah, I absolutely agree. I think this is a fabulous conversation. I honestly believe if we don't have these very targeted conversations, we don't make change, because we're not discussing the important factors of our community that we can improve. I sincerely hope that everybody that attended had a wonderful time with us today, that you took away some great information. We're always here to stay engaged. To Nate's point, I mean, we're trying to find you. We're trying to find the nonprofits, and we're trying to find the community. And you're always more than welcome to reach us too. We're here to help. We definitely, as I mentioned, have a culture of care and of love. And if we can spread that, and if we can do more, we absolutely will. So my information is in our chat. You're more than welcome to reach me via email. You can catch me on LinkedIn, and I can absolutely connect you to whoever you need.
Thank you, Brooke. Selena?
Sure. I just want to thank the participants today for joining in this conversation. It takes a village, and obviously you're part of that village in one way or another. So continue to be engaged, be a voice. If you are a wonk, find a place for yourself, because we need more in this very long journey of equity and equitable access.
Thank you. Thank you, Selena, for acknowledging that. I know that policy is related here, and there are a lot of organizations that play a role in this conversation. James, you know, when you came to us, you said you were telling the truth. We know the truth is there. We know that there's a lot of work to be done, but if you want to share some closing thoughts.
I just say, so as regards as racial equity, I would switch that over to as far as, you know, economic justice. I mean, the headlines are great as far as banks putting those headlines out, but I think actions and measurable goals are even better. In regards to equity, find a minority-led nonprofit, preferably under 300,000 as far as an annual operating to support if you're a bank. And that's the same thing as for some of the smaller minority businesses. Try to find and seek the smaller businesses. I mean, therefore you can help them, you know, grow. And to me, that's, you know, true equity, along with, you know, supporting businesses and, you know, people that reside in the, again, the low income census tracts.
Thank you, James. And with that, you know, we're at our time. Thank you so much to all of our panelists who have joined us today and our audience members for submitting those questions. I know that we didn't get to all of your questions, but the panelists have shared their contact information in the chat, so you could reach out to them directly if you'd like. There will be a recording available, so you could share it with your community and your organizations. Thank you so much for joining this SVP Dallas workshop, and we'll see you next time. We hope that you will engage with Social Venture Partners Dallas through becoming a partner or becoming a sponsor of some of our events. Thank you so much for your commitment to the community, and have a good day.